Welcome to Earnings Central. In this video, we'll break down Spero Therapeutics' fourth quarter fiscal 2024 earnings. We'll cover key financial performance metrics and dig into insights from the earnings call. All right, let's go. Starting with top-line revenue, the original estimate for Q4 was $12.40 million. The company actually reported revenue of $15.04 million, surpassing expectations by 21.3%. However, this quarterly revenue marked a 79.5% decrease compared to the $73.52 million reported in the same quarter last year. Moving to adjusted earnings per share, the original estimate for Q4 was a loss of 31 cents. The company actually reported a loss of 38 cents per share, falling short of expectations by 7 cents per share. This result also reflects a $1.34 decrease compared to the 96 cents per share profit reported in the same quarter last year. Now let's dive into some additional performance metrics highlighted during the earnings call. Starting with Spero's cash position, the company reported $52.9 million in cash and cash equivalents as of December 31, 2024. This represents a solid foundation for their ongoing operations and clinical programs, particularly as they advance their lead asset through critical late-stage development. Importantly, management projects their funding runway now extends into the second quarter of 2026. This extended runway gives them significant operational flexibility and reduces near-term financing pressure as they advance their pipeline, particularly their Phase 3 trial for tebipenem HBr. A key contributor to this financial stability is the remaining $47.5 million in earned and non-contingent development milestone payments from their strategic partner GSK. These milestone payments, part of their tebipenem HBr collaboration, provide important non-dilutive capital that strengthens their overall financial position. Looking at their research and development expenses, we see a significant increase to $97 million for the full year 2024 compared to $51.4 million in 2023. This substantial 88% increase primarily reflects the intensified clinical trial activity related to the Phase 3 PIVOT-PO trial for tebipenem HBr, demonstrating the company's commitment to advancing this potential first-in-class treatment. The company reported a net loss of $68.4 million for the year ended December 31, 2024, with a diluted net loss per share of $1.27. This contrasts with their net income of $22.8 million for 2023, with the difference largely attributable to decreased collaboration revenue from their agreements with GSK and Pfizer, coupled with increased R&D expenses for their pivotal Phase 3 trial. On a positive note, Spero managed to reduce their general and administrative expenses to $23.7 million for the full year 2024, down from $25.6 million in 2023. This decrease primarily resulted from reductions in personnel-related costs, showing discipline in controlling operational expenses while focusing resources on their clinical programs. Now let's shift focus to some of the key insights and takeaways from the earnings call. The most anticipated near-term catalyst is the upcoming interim analysis for tebipenem HBr's Phase 3 PIVOT-PO clinical trial, expected in the second quarter of 2025. This pre-specified interim analysis will be conducted by an independent data monitoring committee and could potentially lead to early trial completion if positive results are observed. Management outlined 3 possible scenarios: meeting the primary endpoint at interim and stopping the trial, stopping for futility, or continuing enrollment as planned. What makes tebipenem HBr particularly significant is its potential to become the first broad-spectrum oral carbapenem antibiotic for treating complicated urinary tract infections, including acute pyelonephritis. This represents a potentially transformative advancement in the treatment paradigm, as current carbapenem antibiotics are only available in intravenous formulations, requiring hospitalization or outpatient IV therapy. Spero's partnership with pharmaceutical giant GSK provides a clear commercial pathway for tebipenem HBr. Following completion of the Phase 3 trial, GSK will assume responsibility for regulatory submissions and commercialization efforts. If successful, Spero could qualify for approximately $400 million in contingent milestones, including $25 million upon NDA submission, with additional milestone payments tied to commercialization progress and sales performance. Regarding their secondary program SPR720, management reported disappointing results from their Phase IA proof-of-concept study in non-tuberculous mycobacterial pulmonary disease. The interim analysis of 16 patients showed the study did not meet its primary endpoint of bacterial load reduction. While there was some evidence of antimicrobial activity, the treated arm did not show sufficient separation from placebo. The company is now analyzing the complete dataset from all 25 enrolled patients before determining next steps for this program. In a significant pipeline prioritization decision, Spero announced the discontinuation of SPR206, their four-administered next-generation polymyxin antibiotic. This program had previously cleared an IND in 2024 for a Phase 2 trial in hospital-acquired bacterial pneumonia. This decision reflects management's strategic focus on advancing their lead asset tebipenem HBr while carefully managing resources. Finally, the earnings call highlighted the substantial market opportunity for tebipenem HBr, with an estimated 3.4 million complicated UTI cases reported annually in the United States. Complicated UTIs are a leading cause of hospitalizations and occur in patients with structural or functional abnormalities of the urinary tract, or those requiring catheterization. These infections are more likely to be caused by multi-drug-resistant pathogens, creating a significant unmet medical need that tebipenem HBr aims to address. That wraps up our recap of Spero Therapeutics' fourth quarter fiscal 2024 earnings. If you found this recap helpful and want to stay on top of more earnings reports from other companies, don't forget to subscribe. We've got plenty more quick and easy breakdowns coming your way from Earnings Central.